So I'd like to thank the IESB, the task forces and the staff for all their hard work in preparing the materials for this meeting. I think they were timely and as I've gone through them are very comprehensive to the various topics that will be presented today. So the first order of business is to look at the draft minutes that have been circulated to you. We don't call on a vote, but just for approval. We had the September and October 2020 CAG meeting, public session. If you want to log in with any changes or comments on those, do I hear anything? Just raise your hand if you have any issues. Jeff, I don't see any, so I'm going to move forward. And then we had the October 2020 joint session with the IAASB on public interest entities. Similarly, if there's any objection, please raise your hand. And then just very quickly, sort of the protocol for the meeting. Please make sure that your microphone is off or is on mute. If you wish to make a comment, then raise your hand. And just so you know how it works, and it's not terribly intuitive, you raise your hand again when you're finished and your hand will go down. So you hit your hand to go up and then you hit it again when you want it to go back down. And so after you've spoken, if you can make sure to drop your hand and place yourself on mute again. So Deanne Jules is going to give us some highlights, primarily, I guess, the rollout of the non-attest services standard that has been recently issued, as well as the one on fees. And I think maybe some comments on the public interest entity project. So Deanne, the time for the next few minutes are going to be for you.
Thank you very much, Galen, and hello, everyone. Thank you. I hope 2001 has been kind to you. It's great to see you again. As mentioned, I will kind of, walk you through the four report backs that form part of your package, and and in doing so, I will talk a little bit about the rollout initiatives that we have planned, particularly for the non-assurance services and fee, the revisions to the non-assurance services and the fee related provisions to the code. So just so you're able to follow with me, I'd like to direct you to agenda items A3, A4, A5, and A6. And I will start first by talking through A3 and A4, which deal with non-assurance services and fees. So I'll deal with these first, and I'll open it up to see if you have any comments. So this is all in your paper, just really high level. I want to just point out a few things. The board approved the revisions to the non-assurance services section of the code, as well as the fees section of the code in December. These are subject to approval by the PIOB. Provided we get the PIOB approval, staff and the rollouts, the newly established rollout working group is actively working behind the scenes and planning for the final pronouncements, as well as basis for conclusions and a number of other supporting materials to be released at the end of April. I know some of you are looking out for a date. I don't want to commit to a specific date at this point, but I'd say the last couple of days in April is what we're targeting. As is customary, the actual report back, which is on the September discussion, you can find that in paragraph 9 for NAS, which is agenda item A3, and you can find that in paragraph 10 for fees of agenda item A4. At this time, I want to pause and see if anyone has any comments. or questions. I should also say that with us today is the chair of the Non-Assurance Services Project, Richard Fleck. He's on the call. And for the fees, one of the fee task force members, Caroline Lee, is also on the call. So to the extent that I need help answering any of your questions, if you have any, I would definitely reach out to them. Okay. I don't see any hands or any, which I'll read as no questions. So I'll move on to the next documents. Agenda item A5 is what I will point you to next, which deals with our project on objectivity of engagement quality reviewer and other appropriate reviewers. This one is a project that that has been closely coordinated with IESB. It is intended to be a complementary set to the IESB's ISQM2. The board approved the changes to the code back in September of 2020. These have already been approved by the PIOB, and they've been released as the final pronouncements in January, and they will come into effect in December 2022. At this stage, the report back on the September, or I should say the October discussions is at paragraph 12 of agenda item A5. I'm going to pause here and see if you have any questions in terms of our responses to your comments.
Deanna, I don't see any hands being raised.
Great, terrific. Now, final report back. Agenda A6, it deals with the definition of listed entity and public interest entity. This one is relates to an exposure draft. The board proposed revisions to the code to revise the definition of listed entity and public interest entity. This was done just December, and the exposure draft was released in January and will be open for comment through May 3rd. We have a number of activities planned to help provide you the opportunity to learn more about, I want to say almost learn more about the proposals, including 2 webinars that are planned for this month. The dates escape me right now, so I'm going to turn over to Jeff. I think it's March 23rd and 25th, but Jeff will be able to confirm. Before I turn to Jeff, I want to let you know that the report back on the October discussion is in paragraph 7. So Jeff, if you don't mind confirming the dates for the webinars, so CAG representatives should in case they're interested in registering, they can think about it.
Yes, thanks, Leanne. The first one is on March 25th. And then the second one is on March 29. And they're both the same webinars, and it's 1 hour. So you're very welcome to join us on those either one of those 2 webinars.
Wonderful. And the presenter will be the chair of the PI task force. IESBA member Mike Ashley. You will also have an opportunity to ask questions should in case you have any. So with that, I'll just pause for a few minutes, see if anyone has any questions. I don't see any hands, and the faces look pretty satisfied. I see in the chat some are asking for a link as to how they can register for the webinars. I'll drop it in the, one of us will drop it in the chat very shortly for you. Okay, with that, thank you very much for your time. It's 8:42. With that, I'll hand it over back to Galen so we can kick off the rest of the meeting.
Thank you, Deanne. And by the way, I did receive a email with the link to those webinars to register for those. So I think those are well timed and on a very important project that is going through IESBA right now. So thank you again, Deanne, for your presentation. So benchmarking is next up, and we have Laura Friedrich, who is a technical advisor and also the working group chair on the benchmarking initiative. And I'm going to turn it over to Laura to make her presentation now.
Thank you so much, Galen, and thanks to Sylvia, who will bring up the slides for us here. I see her intently working on getting those up for us. There we go.
Just a moment, Laura, I'm working on that.
No problem. There we go. Excellent, thank you. And I'm just going to turn off my video here to conserve bandwidth at this end. So thanks very much. Good day, everyone. And if we can move to the next slide, Sylvia, that would be great. Perfect, thank you. So today I'm here to give you just a brief update on the IESBA's benchmarking initiative in terms of what we've been up to in recent months and where we're headed. And I just want to quickly acknowledge the team here. As noted in the agenda paper, the working group is made up of myself, Richard Fleck, and Rich Huskin, with Sylvia Sramko taking the reins as project lead from the IESBA staff side, and Deanne Jules providing oversight. Next slide, please. So just to recap the background and the scope of the project, one of the drivers of the initiative is that concerns have been raised in the past by some stakeholders that because of the principles-based approach of the code, it might allow too much flexibility and judgment on the part of auditors and audit firms. And some of these stakeholders have the impression that national laws and regulations that are more rules-based are also more robust and more enforceable. But these views don't capture the complete picture. They don't always give full credit to the rigor and the strength of a principles-based approach and the way the code's conceptual framework and the specific provisions work together. And it's also important to note that the last time a major benchmarking study was undertaken was in 2011, and the independence framework of the revised and restructured code has changed significantly since then. And of course, as we're all aware, it continues to be enhanced through revisions to sections such as the recent changes to NAS and fees. So one of the key aims of the benchmarking initiative then is to highlight the strength of the conceptual framework and the independence standards overall, and to demonstrate to key stakeholders such as regulators, national standard setters, and audit oversight authorities, to demonstrate how the IESBA's independence framework has evolved over recent years. In other words, the benchmarking is intended to provide both an operational comparison tool as well as being a strategic sort of exercise to make sure that we're promoting the strength of the code in regulating the behavior of auditors and to help overcome some of the misconceptions that might still remain in the marketplace. So building on this context then, the benchmarking initiative's goal is to provide a comprehensive comparison of the code's independence framework with equivalent provisions from other jurisdictions. And as a starting point, we're mapping the code's independence provisions for PIEs against the rules of the SEC's or the US SEC and the Public Company Accounting Oversight Board, PCAOB. The US framework was chosen because its rules represent one of the most recognized independence frameworks globally. Next slide, please. So with respect to the anticipated timeline for the project, the working group has spent a fair bit of time over the past few months testing out approaches and working out what we think will be the most efficient way to provide stakeholders with useful information and some useful resources at the end of the initiative. At the IESBA meeting next week, I'll be presenting a bit of a demo of the overall approach, the presentation, and the deliverables, as well as our preliminary thoughts on the terminology that we'll be using to describe the levels of similarity or difference between the requirements of the two frameworks. Then in June, we expect to have evaluated a number of the sections to the point where we can highlight the key areas of difference for the board and more fully demonstrate the means of handling different situations within the comparison. And then in September, we're planning to be able to present drafts of the deliverables and the main comparisons and mapping tables, with finalization of the reports coming in October or November. Next slide, please. So in terms of which sections of the code will be focused on when, let me just acknowledge up front that the working group recognizes the keen interest that stakeholders have in the NAS provisions that have been recently revised. We know that this is an area that stakeholders are eager to see conclusions on. But in order to make sure that we have a solid methodology in place, we're not going to start with those sections. We're starting with sections that have been stable for a while so that we can work out the methodology on sections that are well established. This will allow us to test out the structure and the approach and also familiarize stakeholders with the anticipated deliverables before tackling some of the more intricate areas in the standards. So our plan then is to do the evaluation of NAS and fees sections after their release in late April. And we'll also look for opportunities to coordinate with the NAS and fees rollout working group to hear where questions are arising from stakeholders and to ensure that we're considering those as well in our work. The next slide. And I just want to touch quickly on the deliverables that we're planning on producing. So for our final outputs, we recognize that different users of the comparisons are going to have different needs with respect to the level of detail that'll be useful for them. So we're structuring the final deliverables at two levels. At the higher level, we'll be producing a summary report that'll provide an overview of the approach taken and the key findings with respect to similarities and differences between the code and the SEC and PCAOB rules. And we expect that this document will be no more than about 10 pages and will provide a fairly succinct view of the overall conclusions. So this summary report will serve the needs of many stakeholders, but some users will be looking for significantly more detail. And for those users, we'll be producing a detailed report that includes a variety of mapping tables that present those detailed comparisons of the requirements, along with an introductory section that explains in depth the comparison between the overarching frameworks in the code and the SEC standards. In other words, comparing the application of the conceptual framework and of the SEC's general standard. And we're anticipating that this detailed report will be comprehensive and fairly lengthy, and it's planned to be published as an IESBA staff document. And next slide, please. So I mentioned earlier that at the IESBA meeting next week, I'll be sharing with the board the working group's preliminary ideas on the terminology to be used with respect to the similarity and difference, or the level of those between the code and the SEC rules. And the key term that we've been working with is equivalent in effect. And what we mean by equivalent in effect is that when making comparisons, we're looking to see if the respective provisions apply to the same type of entities, apply to the same circumstances or services, and ultimately then whether they achieve the same effect. And it's important to note that when we evaluate the requirements of each framework, we will also be considering how the application of the conceptual framework or the application of the SEC's general standard, how this helps the professional accountant determine the appropriate outcome in a particular situation. In other words, we won't just be looking at the words of a particular provision or rule, but instead we'll be considering the full requirements that are established by each framework, taking into consideration the conceptual framework and the general standard, in the same way that an auditor would be expected to do when determining what action is appropriate in a given situation. Okay, and next slide. So that is the update that I wanted to share with you today. And at this point, I'm happy to take any questions or comments.
Yeah, so if you can raise your hand if you'd like to bounce something off of Laura here. I did want to make one comment, Laura, and maybe you'd have a follow-up on it. In reading through the materials, the focus isn't necessarily on which framework is more stringent. Is that correct? Is that?
Yeah. So the intent for the comparison is to look at the requirements overall, but yes, not to come up with a final conclusion overall as to which is more stringent. Yes. Good point. Thank you, Galen.
All right, so I see Natasha Lendo-Mills has raised her hand. Natasha, the floor is yours.
Thank you, and thank you for that presentation. I guess maybe it's a slightly similar comment, or question, which is, I mean, you started off by saying that one of the aims seems to be to demonstrate that the principles-based approach is, is as effective as more of a rules-based approach. But that sounds like a conclusion that ought to follow from the analysis rather than should be the starting point for the analysis. So that's one question. I mean, are you approaching this with an open mind as to figuring out which is actually going to have the best outcome for, I would say, for investors, but also, I guess, the broader public? And the second question is really, I'd love to have a little bit more granularity on the methodology that one will use to establish which approach is more effective. I mean, how are you going to establish that? Thank you.
Perfect, thanks. So yes, absolutely. I'm certainly not intending to say that we've made up our mind already, obviously, but the conclusions do have to follow from the analysis, as you point out. The intent, though, is just to make sure that we are highlighting and showcasing the strength of a principles-based approach, and particularly the strength of the approach of the code, and that we are considering how all of the elements work together with the conceptual framework and the specific provisions. So apologies if I was giving the wrong impression there. With respect to the specifics of the methodology, I'd hesitate to get into too much detail at this point, as it is still fairly early days in terms of how we are working through. But again, the intent is to make the comparisons looking at the issues that are of importance to stakeholders reading through it, trying to find the right level of granularity when we're making the comparisons, such that it is a useful comparison for users, while at the same time, capturing enough detail to, again, be useful but not be overwhelming. So I'll leave it at that at this point. Hopefully that helps provide a little bit more clarity. We will be focusing very much on the issues that users are most interested in.
Could I just jump in if I may on the first point? Because again, you said, one of the points is to showcase the strength of a principles-based approach. But I do feel that if you're going to do this objectively, you should be showcasing both sides. You should be seeking to really just to look at, as I say, in a very balanced way at both alternatives to then come to a objective view of which is better. If you go in with one of your intents is to showcase the benefits of one, I think that could lead to a skewed outcome.
Absolutely, yeah, point taken. I'm speaking from the point of view of IESBA, and perhaps that's being reflected in my comments. But yes, absolutely, we do recognize that the frameworks of many different jurisdictions absolutely have definitely different strengths, and we have no issue absolutely with the SEC framework is a very, very strong one, obviously. So yes, point taken, thank you.
Okay. All right, Shigeo has a comment. I see his hand raised, our PIOB observer. Shigeo?
Thank you very much, Galen, and thank you for the presentation. Now, I had a similar question with like Galen and Natasha. It's a bit sort of difficult to understand that on the one hand, you say that you're going to make a detailed comparison. I imagine that you're going to have a very detailed comparative table. But on the other hand, you say that you're not going to make judgments regarding which framework is more stringent or not. So you're going to present the table, but let the readers infer from this table that which is more sort of stringent or not. And I went back to the similar exercise the IESBA has done in 2011. And in that document, I didn't read the whole thing, but in the beginning, you say that you make a sort of judgment that which jurisdiction has more restrictive than the code, and which jurisdiction has less sort of restrictive than the code. So you're not going to take that approach. Is that what you're saying? Or I'm not quite sure what the ultimate objective is.
Thank you. Yes, so just to reiterate, when we're saying that we're not intending to come up with an overall judgment as to which framework is more stringent, we're speaking on an overall basis. Yes, absolutely, we will be making comparisons and making conclusions on the comparisons of the specific provisions and the rules, but the intent is not to come out at the end of the day and say this approach overall is a more stringent approach. It'll be done focusing on those similarities and differences with respect to specific issues.
Okay, thank you.
I see Conchita has raised her hand. Conchita?
Yes, thank you. Related to the first two comments, if I may go directly to the point, what could be the value proposition of the entire exercise? Are you validating a hypothesis, or is this something that you just want to highlight the differences? And if so, what will it achieve? Thank you.
Thank you, Conchita. We're running a little bit short, so and I see quite a few other hands raised. So let's take their comments and give Laura a chance to respond. But if you could maybe condense a little bit, Jim Dalkin, if you'd like to make a point.
Thanks, Galen. And I work in developing some of the ethics standards for governmental. And one of the challenges we've found is sometimes the principles, ultimately rely on professional judgment, and two professionals can have vastly different views. So we've ended up with somewhat of a hybrid approach, providing some floors and ceilings. So that might be a consideration as well.
Thank you, Jim. Hilda Bloom?
Yes, good afternoon. I would like to wish you lots of success with this project, because this is far from easy. Actually, quite a number of years ago, we tried to do the same between the European independence and ethics requirements and the IESBA code. And this is not an easy exercise, and it requires quite some judgment in order to come to comparable results and conclusions. Now, being the new kid on the block, I guess I am allowed to ask. This is phase one, I understand, and I might not have read the right papers, or not all of them, but I guess you will complete that with other phases and other comparisons between the IESBA codes and other regional or national independence and ethics requirements. But I wasn't entirely clear on that. And I also agreed with Conchita's question. I think it's not yet totally clear what you really try to achieve, but I'm sure it will become clear as we go along in this project. Thank you.
Thank you, Hilda. Richard Fleck.
Thank you, Galen. Just to explain, I'm a member of the working group, and that's the basis on which I'm thought I would contribute, if you wouldn't mind. I think it's important to understand that the objective of this is to have an objective comparison of the two different regimes. And the objectives also include identifying what issues, what areas require further consideration or further adjustment, amendment, supplementation in the IESBA code. So I'd like to reassure people that the objective is to achieve something that is reliable, objective, and is informative as to the way forward for IESBA and for others generally. So that there's no question of this being an exercise that's designed to promote a particular point of view. There are some challenges, as Hilda has indicated, because of the conceptual differences in the way in which these regimes are set up. And working through that, as Jim has indicated, is one of the factors that we will have to have regard to. But rest assured that this is very much intended to be a critical self-examination in comparison with the SEC.
Thank you, Richard. And Stavros, you'd like to make a comment?
Thank you very much. Richard covered much of what I wanted to say. This exercise, in my opinion, is very careful about not making easy assumptions when comparing things that are not necessarily comparable. A principles-based code is quite different from, say, the SEC or any other national jurisdiction, because a principles-based code is supposed to be of global use, and it must be able to fit with different legal institutions across the world, which is not the case of the SEC. So we realize that this is not a direct comparison of saying what is better, nor is there an intent there to tell everybody, look, the IESBA code is better than all other codes. No, no, not at all. To put in a word what Richard also mentioned is that we're coming close to the time when IESBA will start looking for its new strategy and work plan. And clearly, since we've come quite a long ways in terms of changes in the code and enhancements, especially in the area of independence, it's good to get direction by these benchmarking exercises, keeping in mind that these are not directly comparable, since one is principles-based, the other has the ability to set rules. But keeping that in mind, we may get directional signals from these comparisons as to where the strategy, the global strategy of the IESBA standard setting should go. So please keep that in mind. It's not just a matter of saying which is the better.
Thank you, Stavros. Daniel, and if you can try to make it quickly so that we can move forward here. And Jim Dalkin, I see your hand still raised. I don't know if you wanted to come back or not. Okay, so Daniel.
Thank you, Galen. Thank you.
Yeah.
And it's just a very quite simple thing. I think benchmarking is always an interesting exercise, but my concern is about the objectives and the approach that different regulatory frameworks can have. On the other hand, the IESBA is made up of representatives of different organizations and countries, and it would be understood that when drafting the code, all experiences are taken into account. That's only the awareness I would like to express. So thank you.
Thank you, Daniel. I don't see any other hands raised. Laura, would you like to respond in general? And yeah.
Absolutely, yes, and recognizing the time, let me just wrap by saying thank you for all of your comments. And yes, Richard and Stavros, I think, have wrapped up fairly well in terms of addressing most of the comments and concerns that have been raised. But thank you again for those.
Thank you, Laura. And it'll be interesting seeing this going forward. Which brings us to the SEC's presentation, and an educational presentation that I think dovetails into what we've been talking about in terms of gaining an understanding of recent changes that they've had. So with that, I'd like to introduce some of our SEC colleagues, Jenifer Minke-Girard, who I think has been to one of our CAG meetings in the past. We have Jasdeep Mangat, Matt Hodder, and not to leave out Vassilios Karapanos, I believe who might be on the webcast today. They'll be giving us a brief overview of some of the recent revisions in the SEC independence rules. So with that, I'm not sure who will be leading this. I believe it might be Jenifer.
Yes, that's correct. Can you hear me?
Yes.
Great. Well, thank you, Galen. And I think Diana is going to be doing the slides for us, so thank you for that. Okay, so Thank you all. I'll go ahead and kick it off. It's good to be here. As Galen said, we do have our independence team here. So in addition to me, we have Jasdeep Mangat, Vassilios Karapanos, and Matt Hodder. I know for some of you, you would have heard the presentation that Vassilios and I did last year at the CAG meeting. In fact, I think it was our last day in the office before we all went to full-time telework. So, but we're happy to be here again with you, and wanted to provide a refresh on last year's remarks. And also, I understand you're interested in the recent amendments to the SEC's independence rules. So we'll talk about that. So next slide, please. So of course, I first need to give our standard SEC staff disclaimer that will apply to all four of us as the presenters today. And so just keep in mind that the views we express today are our own, and the views do not necessarily reflect those of the Commission, the Commissioners, or other members of the staff. So next slide, please. And again, these are the presenters today. And so I will start off with a brief overview of our independence consultations process. And following that, Jasdeep will provide an overview of the SEC independence rules in Rule 201 of Regulation SX. Then Vassilios will discuss the recent amendments to the SEC independence rules. And finally, Matt will finish off with a brief discussion of the PCAOB independence rules and standards and the recent conforming amendments that they made as well. So next slide, please. So as I said, we'll start with the independence consultations process. Next slide, please. Okay, so just to give you a few reminders about our process, and I will say too, I remember from my experience working with IOSCO Committee 1 that different regulators around the world have different processes. Some may have consultations processes, some may not, and they may be, and I think many are different from ours. So I think it's useful just to go through our process briefly. And so we do think our consultations process related to independence is in keeping with the broader mission and objectives of the SEC, which include to enhance investor protection and facilitate capital formation. Our consultation process provides a mechanism for auditors and registrants to come in and talk to us and to evaluate either on a pre or a post-filing basis situations in which auditor independence may be impaired and action may be needed based on our existing rules and our staff guidance. We think also the process fosters a greater level of consistency across audit firms and over time in application of the rules. It's also a good way for if auditors do have questions as to whether or not they might have an independence issue, it's better to talk to us up front and avoid costly re-audits later if they later determine that they had a problem with under our rules. And so as listed on the slide, we do take both formal and informal questions. As examples, we'll take questions about independence violations, but also, as I said on the front end, interpretive questions about the rules. And how much we're able to say in each case will, of course, depend on the particular matter, the facts and circumstances, and then also the extent of detail that the requester is giving us. Formal written submissions will generally result in more substantive staff feedback from us, and I will speak more about that in a little bit. So next slide, please. In terms of sources of consultations, we do, of course, take questions from the public, as well as from other SEC offices and divisions. We most frequently interact with accounting firms or audit firms of all sizes, large, medium, small, everything in between. And we also receive questions from companies, law firms, other regulators, and others as well. Next slide, please. So first, just talk briefly about the informal consultations. As noted on the slide, these questions generally relate to a specific provision or section of the SEC independence rules. For example, it may be a specific partner rotation question or a specific type of non-audit service that the audit firm may be wanting to provide to an audit client. As I said, the requesters are usually accounting firms, and they're usually seeking guidance from us in advance of undertaking a service or entering into a relationship when we get these informal questions. Because of the informal nature of the questions, our team generally provides more what we call directional guidance to assist the requester in understanding the rules, and so we do not provide formal views on these types of questions. The informal consultations process has also been very useful recently and a good mechanism for people to bring us questions about our recently amended SEC independence rules and the changes. And so Vassilios will talk a little bit more about that when we get to his section. Next slide, please. So in terms of the formal consultations, as noted on the slide, formal consultations are typically conducted through written submissions that outline the particular facts and circumstances on a named basis. So we'll know the name of the audit firm and the company. Often we receive formal consultation submissions from in situations where a company is planning to go public and it would like to engage a particular audit firm, which is usually the incumbent auditor, but not always. So they want to engage a particular firm to conduct audits under PCAOB standards. And in evaluating the independence of the prospective firm, the company and the firm may have identified certain services or relationships that are relevant to the audit and professional engagement period that they're looking at, and that would be impermissible under our rules. And so we'll consider the details of those fact patterns. And we really look to the conclusions of the company management, the audit committee of the company, or if there's no audit committee, those charged with governance, and then the audit firm as well, and really looking at the audit firm's objectivity and impartiality to conduct the required audits despite what would be a violation if they were to be engaged. And so if we do not object to that fact pattern, we do expect that appropriate disclosure will be made by the company in its filing, SEC filing, to provide investors with relevant information, including the nature of the independence violations and consideration of the firm's objectivity and impartiality. So that's a brief overview of our independence consultations process. And as I said, I will now turn to Jasdeep to present the next section, which is an overview of Rule 201. So next slide, please. And Jasdeep, on to you.
Thank you, Jenifer. My name is Jasdeep Mangat, and as Jenifer mentioned, I'm a member of the independence team here at the SEC's Office of Chief Accountant. It is a pleasure to be with you here today. During this section, I will be providing you with an overview of the SEC's auditor independence rules as specified in Rule 201. Next slide, please. Next slide, please. Skip this one. Thank you. Since the SEC's creation in 1934, the need for auditors to remain independent has been consistently emphasized. Here in the US, it's the federal securities laws that reflect the importance of independent audits in protecting investors by requiring or permitting the Commission to require that financial statements filed with the Commission by public companies, investment companies, brokers and dealers, public utilities, investment advisors, and others be certified or audited by independent public accountants, and by granting the Commission the authority to define the term independent. The Commission's requirements regarding auditor independence can be found in Rule 201 of Regulation SX, and in the interpretations, guidelines, and examples that are collected in Section 600 of the Codification of Financial Reporting Policies, entitled Matters Relating to Independent Accountants. The Commission also makes publicly available, the staff's written responses to requests for informal advice on its independence requirements, or what we refer to as frequently asked questions. The SEC's auditor independence rules went through a significant modernization process in late 2000, and then again in 2003. The objective and the purpose of these changes were in recognition of the changes that public accounting firms were undergoing, specifically the broadening of services and relationships that those public accounting firms were offering. The changes continue to reflect the need for the financial reporting process to ensure that investor protection remained paramount in everything that we do here at the Commission. Since then, the Commission has gone through the process of revising its auditor independence rules, once in 2019, which was referred to as the amended loan rule, and most recently in October of 2020, which Vassilios will be providing you an overview with. In the US, private companies undergoing an initial public offering and existing public companies, they're also referred to as the 33 and 34 Act filers, must comply with the SEC's independence rules. Additionally, registered investment companies, registered investment advisors, unregistered funds, and brokers and dealers also must comply with SEC's Rule 201. Next slide, please. The SEC's Rule 201 was designed to ensure that auditors of public companies are qualified and independent of their audit clients in both fact and appearance. The construct of Rule 201 includes principles-based considerations, which are outlined in Rule 201B. It further describes prohibitions against certain financial, employment, and business relationships between an accountant and its audit clients, as well as restrictions in the provision of certain non-audit services to audit clients, all of which are covered by Rule 201C. And last but not least, Rule 201 provides definitional guidance as well as other technical guidance that accountants must comply with when conducting audits of financial statements for public companies. For example, ensuring timely and proper communications with audit committees and partner rotation requirements, having robust quality controls in place, etc. Next slide, please. So I just mentioned Rule 201 provides for principles-based considerations which are covered by Rule 201B, or what's also referred to as the general standard. The general standard states that the Commission will not recognize an accountant as independent if the accountant is not, or a reasonable investor with knowledge of all relevant facts and circumstances would conclude that the accountant is not capable of exercising objective and impartial judgment. If you recall, I stated earlier that Rule 201 was designed to ensure that auditors are independent in both fact and appearance. Excuse me. You may question how one evaluates or assesses independence in appearance. It's here in the general standard where we emphasize that a reasonable investor with knowledge of all relevant facts and circumstances would conclude that the accountant is not capable of exercising objective and impartial judgment. This reasonable investor test is how one evaluates an accountant's independence in appearance. Next slide, please. Now, we can't talk to you about Rule 201B and the general standard without reference to the introductory note to Rule 201. Prior to the October 2020 amendments, the introductory note was titled the preliminary note. The introductory note enhances the general standard and provides 4 general principles indicative of a relationship or a provision of a service that would impair independence. Specifically, an accountant's independence would be impaired if a service or relationship, 1, creates a mutual or conflicting interest between the accountant and the audit client, 2, places the accountant in the position of auditing his or her own work, 3, results in the accountant acting as management or an employee of the audit client, and 4, places the accountant in a position of being an advocate for the audit client. Next slide, please. I've spent a little time covering the introductory note and Rule 201B. However, as I mentioned earlier, Rule 201 covers much more than this. So Rule 201C describes prohibitions against certain financial relationships, employment relationships, and business relationships. It also covers the provision of certain non-audit services to audit clients, certain fee arrangements with audit clients, and it also describes certain requirements in the administration of audit engagements by the audit firm, such as partner rotation requirements, audit committee communications, and compensation arrangements of auditors. Next slide, please. I'll focus the remainder of my time here to highlight to you specifically Rule 201C4, which describes the prohibition of certain non-audit services an accountant may consider providing to its audit clients. Please keep in mind that the list that you see before you is non-exclusive. The non-exclusive list, so the rules cannot be and they do not contemplate every service that may arise. So this is one of the reasons why Rule 201B and the general standard are integral to the evaluation of an auditor's independence. The rules set forth that an accountant is not independent if the accountant provides any of these non-audit services to an audit client at any point during the audit and professional engagement period. The services in red, bookkeeping, financial information systems, design and implementation, and management functions, are the services that we tend to receive questions on more frequently in the consultations that come to us, so that consultation process that Jenifer just mentioned to you, both informal and formal consultations. Now I'm going to pass it over to Vassilios, who's going to be providing you with an overview of the recent amendments to Rule 201. Thank you. Vassilios?
Thank you, Jasdeep. Next slide, please. Good morning, everybody. As you are aware, the Commission adopted targeted amendments to the independence requirement in Rule 2-01 of Regulation SX in October 2020, and also approved the PCOB's corresponding conforming amendments earlier this year. These targeted amendments were informed by comments on the December 2019 proposal, as well as decades of staff experience in consulting with firms and others regarding application practice of the auditor independence framework. The final amendments focus the analysis on relationships and services that are more likely to pose threats to an auditor's objectivity and impartiality. As you can tell from this slide, the Commission amended Rule 2-01 in several areas, primarily related to the definitions of affiliate of the audit client, investment company complex, and audit and professional engagement period. In addition, amongst other changes, the Commission updated certain requirements relating to certain loans or debtor-creditor relationships, as well as the business relationships rule, and adopted amendments to address inadvertent violations of the independence requirements as a result of mergers and acquisitions. To help bring some of the changes to life, I would like to outline one example related to the affiliate of the audit client definition. Prior to the recent amendments, an auditor had to be independent of the entity under audit and all other entities that were under common control with the entity under audit. In a private equity group structure, for example, this resulted in the auditor of a portfolio company being required to be independent of all other portfolio companies that were also controlled by the same private equity group. After the recent rule amendments, an entity, let's call it entity B, that is under common control with an entity under audit, let's call it entity A, would be considered an affiliate of A only if both B and A are material to the entity that controls both of them. Let's call it entity C. If, for example, B is not material to C, the auditor of A could provide certain non-audit services to B that would no longer be considered to be impermissible under the amended rules. I would also like to note that in regard to the business relationships rule, as noted in the slide, the Commission replaced the reference to substantial stockholders with the concept of beneficial owners with significant influence, or BOSI. This is similar to the concept that was used in the amended loan rule. Otherwise, with regard to business relationships, there was no intention to make any other changes, add or apply the business relationships rule differently going forward. Next slide, please. Another change is that in an initial registration statement, similar to the existing requirement applying to foreign private issuers, an auditor for a domestic issuer will have to be dependent under the SEC and PCAOB dependence requirements only for the latest year included in the initial registration statement and with local dependence requirements for the look-back years. However, the general standard also continues to apply to all years included in a registration statement, including the look-back years, for which the auditor has to be dependent under the local requirements. As stated in the adopting release, nothing in the final amendments is intended to change the application of the general independence standard in Rule 2-1B. Rule 2-1B applies to those relationships and services that previously were, but are no longer covered by Rule 2-1C as a result of the final amendments. We believe this is appropriate and do not believe that this position broadens the scope of the all relevant facts and circumstances concept in the general standard. We want to share with you, as an example, how we have been approaching the following question that we are getting a lot lately. Audit firms have been calling us asking how to implement the look-back provision in a situation where an existing private audit client is planning to go public through an initial public offering or most often lately, a merger with a special purpose acquisition company, a SPAC. And the audit firm was involved in some manner with preparing the financial statements of its private company audit client. In many of these scenarios, the audit firm was involved with preparing the financial statements for the 2019 fiscal year, with the work taking place during the 2020 fiscal year. In the scenario presented, the private company now needs financial statements for 2020 and 2019 audited under PCAOB standards and in compliance with SEC and PCAOB independence requirements. In considering this fact pattern, we have been advising the audit firms that because the general standard applies for all periods to be included in a registration statement, the audit firm needs to consider the general standard for both 2019 and 2020. In the scenario presented, the staff would view the audit firm as not being independent for 2019 or for 2020. That's because under the general standard, an auditor is not independent if he or she would be in a position of auditing his or her own work, or if he or she acts as management. We also consider the appearance issues associated with an audit firm preparing financial statements for each audit client, in this circumstance. I will now pass it over to Matt to talk through the last section.
Thanks, Vassilios. Next slide, please. Hi, my name is Matt Hodder, and I'm also an accountant in the SEC's Office of the Chief Accountant. Thus far, my colleagues have spoken about the SEC's independence rules, recent amendments to those rules, as well as the SEC's consultation process for auditor independence. However, in the United States, both the SEC and the Public Company Accounting Oversight Board, or PCAOB, have the authority to establish auditor independence rules applicable to audits of issuers and broker-dealers. I'm going to take a few minutes to provide you with some background on the PCAOB's ethics and independence standards, including recent conforming amendments adopted by the PCAOB board in late 2020 and approved by the SEC in January 2021. The authority for both the SEC and PCAOB to establish auditor independence rules applicable to audits of issuers and broker-dealers comes from congressional statutes, namely the Sarbanes-Oxley Act of 2002 and the Jobs Act of 2012, the latter of which as it pertains to the audits of broker-dealers. The PCAOB's independence rules work in concert with the SEC's independence rules, but do impose certain incremental independence obligations on registered public accounting firms. For example, additional prohibitions on tax services for persons in financial reporting oversight roles or FROR roles at issuer audit clients. Next slide, please. The PCAOB's ethics and independence standards can be found on their public website under, quote, rules of the board, end quote, in the 3500 series, also referred to as Section 3, Part 5. The 3500 series outlines the ethics and independence standards to be used, and that's in Rule 3500T, includes definitions of certain terms, that's in Rule 3501, as well as the PCAOB's independence rules that are incremental to those in the federal securities laws, and that's PCAOB's 3520 series rules, which are shown on this slide. A few items to quickly highlight. Rule 3523 prohibits, as I mentioned in the previous slide, Rule 3523 prohibits tax services for persons in FROR roles. Rules 3524 and 3525 outline audit committee pre-approval requirements in addition to the SEC's Rule 201C7. And at the bottom of the slide, Rule 3526 requires communications from the audit firm regarding independence prior to the initial engagement as the auditor and annually thereafter. Next slide, please. Now that I've provided an overview of the PCAOB's ethics and independence standards, I'll provide you with a quick summary of some recent amendments. In late 2020, the PCAOB made targeted conforming amendments to their interim independence standards and rules of the board that revised a portion of the board's interim independence standards included in PCAOB Rule 3500T, also revised certain definitions and terms included in PCAOB Rule 3501, and deleted a portion of the board's interim independence standards included in PCAOB Rule 3500T. Now, the purpose of these amendments was to avoid differences between the SEC and PCAOB independence rules, avoid duplicative requirements, and to provide greater regulatory certainty. As with all rules of the board and PCAOB standards, once the rules are adopted by the PCAOB board, they must be approved by the SEC before they are effective. And I want to highlight a few points regarding the SEC's approval process. First, it's a formal process outlined in the federal securities laws. Next, the SEC's approval comes from the SEC's 5-member commission in a formal vote. The SEC staff does not have the authority to approve PCAOB rules, but we are involved in the process and make recommendations to the commission. And the SEC's approval process results in a ratification vote. While there is additional public comment during the SEC's approval process, the commissioners cannot vote to make any changes to the rule. They can only vote yes or no on the ratification. So as I noted on the slide, the PCAOB's conforming amendments were approved by the SEC in January 2021 and have the same effective date as the SEC's recent amendments from October 2020. Next slide, please. And with that, that concludes our remarks, and the staff really appreciates the opportunity to present to this group, and we're happy to answer any questions.
Thank you very much. Appreciate this, tremendous update that you've given us, educational update on the SEC. It's very informative. I can say as a former practitioner years ago that the consultation process is particularly, I think, unique in as much as it, I'd frequently have questions and I knew someone that I could turn to. I didn't always like the answers that came back, but nevertheless, there was a methodology to get an answer to a question. So with that, let me open it up to the group. Any questions that you'd like to bounce off this esteemed group of people from the SEC? Natasha?
Great, yes, thank you. And thank you so much for that presentation. That was really, really helpful. I have a couple of questions, really sort of practical. First of all, I'd be really interested in the extent to which these sorts of amendments, particularly around independence, which I think is a super critical issue for investors and the integrity of the market, to what extent are they driven by queries from investors? I know you talked about the informal process and the formal process. I don't know whether you have stats on the extent to which investors are the drivers for those, and then the extent to which that leads to the sorts of amendments you've been describing. My second question relates to the principles-based portion of the SEC rules. And it's really to ask whether there have been any examples of where auditors have been found, I don't know what the term would be, but not in keeping with that principles-based rule. I mean, are those cases that you presumably publish on your website? Thank you.
So maybe I can just take the first one. So thanks for the questions, Natasha. The first one, as I understand it, I think you're interested in to what extent are investors maybe bringing questions to us related to independence. I think that's the gist of it, if I got that right. So I think I would say usually in Vassilios, I know has a longer years of experience in terms of answering independence questions. We don't typically get questions directly from investors. It's more likely to be, as I mentioned, audit firms or companies or law firms, on behalf of companies. But sometimes I think their questions are triggered by discussions they may have had, just throughout the organizations. It could be with investors, it could be with audit committees. But we don't get that many questions directly from investors through our consultations process. And I think, and maybe I'll just pause there to see if Vassilios wanted to add anything. Otherwise, we could go to your second question.
No, I agree. Generally, we do not get any questions from investors, directly from investors.
And maybe I just jump in. I mean, that's kind of interesting, isn't it? Because, again, it's a bit of a kind of pet peeve of mine, but as you said very clearly at the beginning, one of the goals of the entire exercise is to protect investors. And yet the core constituency to which you're oriented is not itself saying, look, we have concerns here about independence and we would like you to have a look at that. So I don't know whether there's outreach to investors or other work of such nature that has been done by the SEC, but that would be interesting.
I think it's a good question. I think, you know, as we always know, we don't know, as investors read the disclosures, because I mentioned there are disclosures about auditor independence for companies, particularly when there are violations and they make disclosures about what the nature of those were. We don't know to what extent, you know, investors read that information and either, you know, appreciate it and don't have questions, or, you know, maybe direct the questions, you know, back to the companies themselves. So I think that's an area where it's interesting. I just don't have the information as to, you know, how they react to those disclosures, for example. So I think that's always, you may know as well, I think it's always difficult as a regulator to get input from investors. I think that's been a common problem across, you know, standard setting bodies and regulators as well, as trying to get investors engaged in some of these issues. And it could be that they do appreciate, you know, these processes, but we just don't hear from them as directly as we might hope. They do send in the comment letters occasionally, as they did on the, you know, the independence rulemaking, but it's an interesting area to think more about. And maybe you could just repeat your second question again, that'd be helpful.
Yeah, sure. Thank you for that as well. Just briefly, you talked about the principles-based element of the SEC rules when it comes to independence, so the reasonable investor test. I wondered whether in practice you have ever had cases where auditors have been found not to be compliant with that.
So I can kick that one off. I think it does come up, and I don't know if you're speaking in terms of cases, in terms of, you know, formal enforcement cases versus sort of questions we get through our process. You know, as Vassilios mentioned, I think recently the questions that we're getting around financial statement preparation done by an accounting firm, and then how that impacts the company's ability to, you know, to hire the particular audit firm, particularly with these new rules and the new look-back period. It is very much a discussion about the general standard and the sort of the principles-based aspect of that, the four principles. So we do, in our discussions with firms, we do bring up the four principles quite frequently, and making sure that they're keeping that top of mind, in addition to the, you know, the detailed rules that Jasdeep outlined. I think it does come up as well in the enforcement cases. I guess I'll stay away from the specifics of the enforcement cases, but it is something that, again, is considered. And certainly I'll pause and see if others on the team want to add anything there.
I think the only thing I would add there is it's definitely you know, something that's up for consideration for the Division of Enforcement when they're making a case. It's probably, you know, without having, you know, statistics in front of me, it's you know, my view, probably not something that comes up quite as often. But there's, you know, anything that's out there would be, you know, in the enforcement releases and is eventually publicly available. And yeah, just to, you know, agree with Jenifer's comments that, you know, the principles-based aspect of the rules definitely, you know, comes up in basically every consultation we do, whether it's formal or informal. It's always a consideration.
Thank you so much.
So I saw Hussein raised his hand a little while ago. Hussein.
Thank you. Good morning to everyone. Thank you very much for presentation. I was wondering the application of this implementation of these independence rules. I think a little bit subjective. I was wondering, do you have any cases of violation of independence rules, and then which one is more common? Could you please give some example to us? Actually, we have similar rules but up to now, actually, I think our audit firm most probably comply with audit object independence rules, and then therefore we couldn't have any cases of violation of independence rules. Thank you.
Thanks, Hussein. Let's take a few other comments before they respond to that one, because it's a fairly broad question. Takashi, did you have a comment?
Yeah, thank you, Galen. Hi, everybody. Good evening from Japan. Thank you for the presentation. Very helpful, very informative presentation. Thank you for that, first of all. After I heard your explanation, I could well understood in the last October 2020 revision. Especially, I am very interested in the definition of the affiliate of audit clients. This definition was revised because if I remember correctly, the scope of the related entity in the ethics code at the IESBA, there are a lot of discussion, the scope of related entity, especially in the non-national service project and also a fee project. So I'm very interested in this definition changing. And I think, for example, like a subsidiary in the fund corporate group, as you explained, the private equity group, this definition change might have the effect of the increasing the number of companies that are affiliated of audit client, but are not subject to strict independence requirements, such as prohibition of on providing non-audit services. So with regard to this point, I want to ask you if you have, what kind of reaction of this to this change do you have from various stakeholders? Most of people are welcome for this, or if there are people who had a concern for or opposed to this change, what kind of concerns they have? If you have very helpful for us, for example, as I mentioned, that the scope of related entities, we have little concern related to the field of NAS project, NAS project. So it will be very helpful, not only IESBA, but also our CAG members. If you have any lessons, also we can learn from this revision for the future our discussion. Thank you.
Thank you, Takashi, and Jim Dawkin.
I was just reflecting on the comments and wanted to see from a SEC perspective whether they consider, I guess they call them rules. So is it that they have more of a rules-based or prohibitions-based independent standard, or is it more, you know, which way would you classify it, or is it a hybrid?
And Conchita, you want to weigh in?
Thank you. I'm just wondering, I appreciate very much the presentation and also the seeming sensitivity of the SEC in reviewing and enhancing regulations with respect to the independence of the auditors. My inquiry or point of clarification is what would have driven the SEC in coming up with discontinuing enhancements? Were there incidents of impairment or lack of independence in past cases? That because there are no rules or guidelines on them, that the enhancements were made. Thank you.
Thanks, Conchita. Jenifer, I'm not sure how you want to approach that. Some very general questions. I'll turn it back to you.
Okay, thank you, Galen. And thanks everybody for the questions. These are great questions. So maybe I'll take Jim's first in terms of, I think you asked about sort of rules versus principles, or is it a hybrid? We do refer to the rules because, as Jasdeep outlined, the requirements are really housed within what we call Rule 201 of Regulation SX. So we refer to it as really the rule or Rule 201. But there's also, I do think of it as a hybrid approach because there are the principles, the 4 principles that we mentioned, the general standard of independence, in addition to the detailed requirements, because we do, and I think Jasdeep mentioned this in her remarks, that the commission realized that you can't possibly contemplate all the different services and all the different scenarios and situations that an auditor might find itself in with respect to an audit client. So I think that's where the principles are important to make sure that those cover the other, the various scenarios that might arise or evolve. In terms of the other questions, I was thinking maybe Vassilios could speak to. I think Hussein, your question was about common violations of independence. I think Jasdeep mentioned this a little bit. I think we see a lot of non-audit services violations of various types, but I don't know, Vassilios, maybe if you want to speak to that a bit.
A lot of the consultations that we get from the firms, they have to do with violations like where the firm is not independent because they have provided legal services or management services in their private audit client, or they have provided internal audit or computer-related services to their audit client. In regards to bookkeeping, it's not as often. I think by now, we don't see, at least from the large firms, we don't see it very often. From the smaller firms, of course, bookkeeping, it's something that they do for their private audit clients, including preparation of the financial statements and calculating the tax provision and calculating stock compensation and other similar accounting calculations. So in our consultation experience, we do see pretty much most of the C4 prohibited services violations either being done to the entity under audit or to a subsidiary or to an affiliated company.
Yeah, thanks, Vassilios. And in terms of the other questions, Takashi and Conchita, I think they're maybe somewhat related. So I think one of the questions was about changes to, I may call it changes to the affiliate rule, or really changes to the audit client definition as well. And so this is where the changes to maybe the affiliate definition come up in the recent amendments. In terms of, maybe I'll just speak broadly about, I think one of the questions was what has driven the SEC to make changes. And so when the commission looked at changing the rules, when they put out the proposal in 2019, some of it came from feedback that was received when they had earlier done the loan rule changes back in 2019. And so what constituents pointed out is that just over time, there are areas where the independence rules as they have been written and applied result in some violations that really don't impact auditor objectivity and impartiality. Situations where maybe between the audit firms and companies and audit committees, they're spending a lot of time looking at violations that are not as impactful, and maybe some of the more significant ones get lost sort of because of the large population that they sometimes have to talk through. So it was an effort to really try to focus on those services and relationships and that really have a greater risk to auditor independence, and that's where the commission decided to make changes. And so you'll see some of that in the changes to the affiliate definition, which I think will impact some of those larger, private equity firms that have very large structures, lots of companies involved, where it may, it may end up that some of those entities are no longer going to be considered affiliates of the audit client if they're under common control. And Vassilios went through an example here where if there's a new dual materiality test related to that to see whether whether particular entities would be considered affiliates. And really, in terms of the reaction that we got to the changes, I think so. There were certainly reactions to the proposal. I would say on balance, most of the comments were positive. There were some that were not in favor of the proposed changes. And in terms of the questions we've been getting so far, I think it's maybe too early to tell on some of the changes around definition of affiliates and some of those other changes in terms of what the impact will be. As we mentioned, as Vassilios mentioned, a lot of the questions we're getting are really focused on this new look back period that came through under the revised definition of audit and professional engagement period, where I'll call it sort of full compliance with SEC and PC independence rules is only required for the most recent year that would be included in the filing. And the back years, we require, compliance with the local standard, whatever the local set of standards. However, plus, and this is where I think people are maybe not realizing what's in the adopting release, it's local rules plus the general standard of independence and the principles. So that's something we're trying to emphasize. But, so those are most of the questions we've gotten so far. So I know I've said a lot. Let me pause there and see if others on my team want to respond, and then see if there are any clarification questions.
No, I think the only other thing that I would add would be that in regard to the definition of affiliate, after we made the change, it is more closely aligned with the profession's definition of affiliate.
Jim Dawkin, did you have anything to come back on, Jim, or you're good? No, okay, thank you. I did have just kind of wrap this up because we're sort of out of time. But looking at the two regimes, the SEC and PCAOB, and the IESBA code, the IESBA code has this conceptual framework and the idea of threats and safeguards. Jenifer, the SEC, I'm sure, has thought about this. I just wondered, in light of Laura's presentation earlier, Laura Friedrich, on the benchmarking, did you have anything that you might want to, any observations you might want to say about safeguards and threats and kind of the approach that we take in the code? It kind of puts you on the spot, I understand.
Yeah, thanks for the question. Nothing specific on threats and safeguards. We just don't have that approach, and so we're certainly interested in the benchmarking project and what will come out of that in terms of the comparison. So, just say we're looking forward to learning more as well and seeing where the differences and similarities are.
Thank you. Thank you very much for you, Jenifer, and your entire team. We appreciate your willingness to spend some time with us here today. With that, though, we'll let you go, and we are scheduled for, I believe, a 20-minute break now, if I'm not mistaken, Jeff. So,
yep.
So what time are we coming back? 20 after the hour, or
that's
thereabouts?
Right.
Okay. Thank you.
Thank you very much.
Thank you.
Thank you.
Thanks, everyone.
Thank you all very much.
Hallo Laura, this is Hilde. Geen probleem, geen probleem.
Jeff, I see a lot of screens popping back up.
Yep.
You let me know when you think we're ready here.
I think we're ready. It's time to start. It's 20 past.
Okay. Okay. Well, why don't we get started then in the last segment on technology. We have two IESBA board members that are going to be presenting. First, Brian Friedrich, he's a working group chair, and Rich Hushkin, the task force chair, and they'll probably want to explain, how we have two different chairs heading up technology. So I'll turn it over to you. I don't know who wants to go first, Brian or Rich.
Yeah, thanks, Galen. That's perfect. And thank you, Cam, for putting slides up there for us. So good day, everyone. So I'm Brian Friedrich and the Tech Working Group Chair, and I'm going to be beginning our presentation and discussion around the technology initiative, and then I'll be passing over to Rich about halfway through. Okay, so the objectives of our session really cover what's been happening with the technology project over the past couple of quarters. First is for you to receive a report back on the September 2020 CAG meeting and an update on the various technology activities that our team and now teams have undertaken since last meeting with you. We'll also update you on the proposed way forward for this project, and you'll see that we've undergone as Galen alluded to, a significant restructuring that includes a bifurcation of the project as of December into a task force that's continuing, and also a new working group with fairly separate roles, though clearly a significantly overlapping content domain. From the task force perspective, we'll report on the key messages returned from respondents to the two technology surveys from the fourth quarter of 2020, and I'll be handing over to Rich, our new tech task force chair, who will walk us through that when we get to that point. With respect to the new technology working group, I'm going to provide you with the proposed scope and focus of the activities that the working group will be undertaking, and then also we'll certainly be looking forward to your thoughts and comments on that. Okay, next slide, please. So in terms of the report back from the September CAG meeting, the specific commentary was pre-circulated as part of the agenda paper, so I'm not going to get into a lot of detail, but in summary, what we talked about in September was the task force's approach to address the 7 different recommendations that provide the backbone of its approved project proposal from March 2020. One of the key points that came out of our discussion is the need for additional non-authoritative guidance material, particularly when thinking about the timeline of when changes to the code might be expected, and certainly also looking to be responsive to what other stakeholders have mentioned to us about what professional accountants in both business and public practice would find valuable. You'll also recall that CAG members underscored the importance of keeping the changes contemplated to the code at a principles-based level to the extent possible. And I can certainly say that to date, a principles-based approach has indeed been the focus of the technology task force. This is obviously especially important as technology is in a rather continuous state of flux and innovation, and we clearly don't want to be chasing it around with new draft language every year. In September, we also asked you to consider the concepts of complex versus complicated from this group. So the CAG group, much as with other stakeholders, there was support for addressing complexity through some manner in the code, but suggestions as to the specific approach was somewhat mixed. And I noted that the time further outreach was something that was really needed on the 4 different options that the task force has been considering and also socializing with various stakeholders, including this group. And to achieve a broader understanding of this issue of increasing complexity in the professional environment, that was one of the 2 key topic areas for the surveys that were live in October and November of last year. And as I mentioned, Rich is going to walk us through the results of both the complexity survey as well as responses to the also very important independent survey. But I'll note here briefly that the complexity survey results were consistent in terms of respondents nearly unanimously agreeing, again with the views of the CAG at the time, that complexity should be dealt with in the code in some manner. Another comment that was made at the CAG was that our emphasis should be on how to change behavior as a result of increased complexity, and then directly connected to this, this area is something that's going to be included as part of some of the non-authoritative material that's currently in development, and I'll speak to that in a bit. Okay, next slide, please. So by way of update on the Q4 2020 technology-related activities, I've already mentioned the release of the 2 surveys. In addition, there were also some meetings with several individual stakeholders, as well as participation in a podcast with thanks to Accountancy Europe for inviting me for that, and also an article published here in Canada. What we heard throughout the quarter was increased stakeholder concerns around the pace of changes being made to the code. And clearly this is not just a reflection of what's happening with the technology project, but more broadly with the code. This was obviously something also that really was heightened, I guess, or folks were more sensitive to this issue in the COVID-19 environment that's placing increased pressures on limited resources for numerous individuals. And I suspect this is not something that's new to all of you on the call today either. In December, our task force presented to the IESBA, and we deliberated on various strawman drafts that are intended to advance many of the 7 recommendations. We received board feedback that the task force is currently incorporating as part of its drafting work. And then also at the December IESBA meeting, that's really when the board agreed that it was the right time to bifurcate the technology work stream into the task force as well as the new technology working group. So the task force will be continuing to work on the code revisions that are related to those 7 recommendations that, if you'll recall, going sort of a little bit back in time to the technology working group phase 1 final report that was released at the beginning of 2020, and then that subsequently became part of its approved project proposal and work plan for the task force. So Rich will provide a little bit more of an update on that. The focus of the technology working group will be developing or facilitating the development of non-authoritative guidance and educational materials in relation to technology and its impact on the behavior of professional accountants. And in addition, the TWG will also look deeper at some of those technologies that had not yet been examined in depth by the technology initiative through that phase 1 of 2019. Both of these components of the new tech working group's scope were activities that the tech task force had been sort of trying to do off the side of its desk, so to speak, for most of the past year. But as the task force is now quite deep into the drafting process, it was felt that it's the right time to allocate resources specifically to accelerating the development of what turns out to be quite highly demanded non-authoritative materials, and also to continue to advance additional research on the other technology topic domains. Clearly none of that standing still. Okay, next slide, please. Okay, so just a little bit more depth here on the working group's scope and focus and the 2 main branches of its activities on the left and right side there, of course. So first, with respect to non-authoritative materials, we're setting out to publish at least 4 pieces of non-authoritative guidance during this year, either with collaborative partners, such as IFAC, professional accountancy orgs, NSSs, academics, and so forth, or where it's appropriate, we'll be doing that independently. The topic areas that our working group is recommending are those components where over the past year, as part of that technology task force work, we've identified that the text in the code is already sufficiently addressing the contemplated area, but that guidance would be helpful to clarify or augment the code or to provide additional relevant context for users. So in other words, we're aiming to help provide clarity for situations where the principles-based nature of the code encapsulates a specific situation or application of technology as it relates to ethical decision-making, but where that might not be immediately obvious to readers of the code. So you'll note that the topic areas listed here on that left-hand side are very broad, such as ethical leadership or independence. So we'll obviously be narrowing in to decide on specific elements of guidance within those broad topic areas. We're certainly not planning to write tomes on each one of these. That scoping and prioritization work is underway now. And if you have specific subtopics that you believe are especially relevant, important, and timely, I'd absolutely encourage you to voice those ideas either today or you can certainly shoot me an email as well. All of these topics have come out of the discussions that are related to the 7 recommendations that the task force is examining. So in that way, there's also topical overlap. We've also started reaching out to potential partners that might be interested in collaborating on non-authoritative materials. Again, we're not resourced well enough to simply develop all of these materials ourselves. And there are a number of very interested stakeholders who have both proactively sought out IESBA for doing some of this work, whether it's assistance with or support with authoring materials, or it's reviewing the materials and sort of looking at the fit with the IESBA code and having kind of consistent messaging in that way. We're also going to be continuing to look for other interested stakeholders as appropriate, and then helping to facilitate and collaborate on development with projects that they have underway, and then likewise for ones that we are thinking about. So as it just maybe an early example here, at the beginning of February, so last month, IFAC, CPA Canada, and ICAS in Scotland held a joint ethical leadership in an era of complexity and digital change event with a very diverse group of global delegates. Members of our tech working group and tech task force, either or both, presented and participated in the event, and also are involved in the authoring and or review of several non-authoritative guidance pieces arising from this event. And the first of these, on that topic of complexity, is currently in the process of being drafted. And as a side note, IFAC has posted the exploratory paper, paper that I co-authored, again using, of course, some knowledge and experience from the technology task force of last year. And a recording of that event has been posted on IFAC's event page if you're interested, and certainly drop me a note and I can forward you the link. And actually, why don't I just, because I have it here, I've dropped the link into the chat window for anybody that's interested. Maybe if you're getting bored of hearing me speak now, you can click on the event, but perhaps you'll wait till later. Okay, so back to the big picture. As you might imagine, these non-authoritative resources that are being developed by the tech working group might take a variety of forms, such as using scenarios or illustrative examples, questions to ask when managing technological changes and implementations within a PA's environment, or compiled insights from experienced stakeholders. We don't want to be prescriptive in terms of the formats or the structures at this point, but rather try to customize the form to fit the information and the audience that's being targeted with the specific guidance materials. And so on the right-hand side then, the other work that our working group will continue with as far as the overall project is concerned is scanning those emerging technology applications and use cases to identify and assess their impact on the behavior of PAs. And we'll be providing the IESBA with quarterly updates on our evaluation of topics such as blockchain, cybersecurity, and data governance, as you can see. These are areas that stakeholders have suggested as being the most important to consider for their potential impact on PA ethics. And then much as we did in 2019 with the other topic areas of data analytics and big data and AI, the goal again is to harvest actual examples where businesses, governments, firms, and other organizations are making use of such technologies, and then consider the current or the potential impact on ethical decision-making. And then once again, evaluating whether there might be gaps in the code for which we would recommend that changes be considered and then undertaken by the task force, or whether additional non-authoritative guidance are more appropriate based on the circumstances. Okay, next slide, please. As I mentioned, with the splitting of the technology initiative into 2 work streams, the task force will continue to evaluate how and where code changes should be implemented, while the working group concentrates on non-authoritative materials and enhanced information gathering. But both groups will be drawing information and insights from many of the same sources to some degree. And this clearly requires a strong coordinative and collaborative effort to ensure that we're not duplicating our activities. Some activities are fairly easily delineated. The bulk of the desk research, the fact-finding, collaborating with IFAC, those sorts of things are principally related to the technology working group, whereas coordinating with the IAASB and ensuring consistency with their standards and also the work that they're doing in the technology area, also socializing and receiving feedback on specific draft code changes, those are principally, of course, activities related to the task force. Other information sources are more overlapping. So, for example, the surveys are primarily the domain of the task force because that's the group that released them last year, although there will most likely be opportunities, in fact, there are opportunities, for the working group to draw information from the results for inclusion in some of the non-authoritative materials that are put out. There might also be benefits to both groups in having discussions with the NAS and FEES rollout working groups. And similarly, there will be a need for both groups to continue outreach with the NSS, with industry experts, PAOs, and other stakeholders. But clearly, we recognize that when it comes to discussions, and particularly with that broader outreach, we'll need to carefully synchronize our efforts so that we don't overburden stakeholders with separate outreach requests from these 2 very related teams. Recognizing the need for coordination, both the task force and the working group will be supported by the same IESBA staff, namely Cam Leung, and additional support from Deanne Jules. Also, we have one individual who's a member of both the task force and the working group. That would be myself. In addition, the IAASB's liaison member, Joanna Field, will at various times be participating in both the task force and working group meetings, again, for perspective from, through the IAASB lens. To encourage further collaboration, all of our task force and working group meetings are open to members from the other team if they're interested in attending, and again, we encourage that. We've had some of that already. And then finally, we've been making use of Microsoft Teams to aggregate and to share the results of the technology initiative's desk research and the information gathered through outreach and other activities since March-ish of last year. And that's simply going to continue, albeit now with a larger group, so that, again, we're sharing from the same pool of information and making decisions on that same background. Before I move on, I do want to recognize publicly and also thank Misha Peters, who has been on secondment from the New Zealand XRB and was very, very ably supporting the work of the Tech Task Force since very near its inception. We're really sorry to see Misha's time with us on the technology project come to an end. So I really wanted to thank Misha very kindly, and also the XRB for making her available and her time. Okay, next slide. Okay, and so for my final slide, as you'll have noted from the agenda papers, the IESBA Planning Committee met earlier this year to discuss both the proposed work plans for the TWG and the TTF, as well as the task force's timeline. As a result of that discussion, there's a recommendation being made from the Planning Committee to the board to defer the task force's exposure draft for 6 months, moving the approval time frame for that ED from June 2021 to December 2021. And although this suggestion really began in response to expressed concerns from stakeholders around pandemic workloads and and issues that they were experiencing. And I think we heard sort of an increasing crescendo of stakeholder feedback throughout 2020, but it kind of culminated around the time that the surveys went public in October and November. In our discussions at the Planning Committee, it was also noted that this would provide for a longer period of stability to permit the implementation of the NAS and fees changes that are scheduled for release this April, that the change would also permit the working group to work more collaboratively with the NAS rollout working group by better aligning timeframes for those two initiatives around non-authoritative materials and guidance information. Also, to be able to show how at least some of those NAS changes have a crossover impact with the technology area. Also permits a bit more flexibility with the working group's timing for developing non-authoritative materials to meet stakeholder demands. And then with respect to collaborating across the tech initiative, as the working group is sharing its research and its findings with the Technology Task Force for their consideration as they continue to advance their drafting. Okay, next slide, please. Okay, so with that, I'm going to stop here and see if there's any questions or comments at this stage, specifically in relation to that report back, the scope, focus of the new technology working group, or the on the proposed deferral of the Tech Task Force's exposure draft to December 2021.
Okay, so if participants have questions there for Brian. Brian, it seems to me that, you know, the deferral at this point really isn't really a deferral for 6 months, because it's sort of caught up with us.
Yeah, I think that's a fair point. It's a little bit of what we were talking about on our technology task force call as well. Is yeah, no, just agree with your sentiment.
Shigeo, our POAB observer, Shigeo, if you have some thoughts on this.
Thank you, and thank you for the presentation. I'm happy to support the overall direction of this project, including the creation of the new working group to develop non-authoritative material. I welcome your intention to have a good collaboration and coordination between the working group and the task force. On the issue of the deferral, I can understand the reason for the deferral, but I think in view of the urgency of the project from the public interest perspective, I hope there'll be no further delay on this project. I have one sort of a naive question. This planning committee, this is the IESBA. I'm not sure to whom I'm addressing this question, but the planning committee is the IESBA planning committee, I understand. Yesterday at the IWSB CAG meeting, there was an explanation about the IWSB planning committee, and they have a charter for this planning committees in the website. So I went to the IESBA website to see whether they have the charter for the IESBA planning committee, but I didn't see it. So I wonder what this planning committee is. Thank you.
I think that's for me to answer, if I may.
Yes, thank you.
The planning committee of IESBA, I would say that it's a very long-standing instrument, which is an informal instrument. It's not a formal one. It's convened by the chairman or the chairperson in order to advise the chair on how to proceed on strategy and on decisions and management of the board each year. To me, it has been very, very helpful. So I don't make these decisions alone. I consult with the planning committee frequently, And as of the last couple of years or 3 years, the practice has been to ask the chairs of the main task forces to come onto the planning committee so that we can have coordination and management of resources at that level. So that's what it does. It's, as I said, an advisory board. It's not a constitutive board of the of IESBA. And indeed, it was the, I would say, unanimous view of the planning committee, as Brian was saying, that we had to do something about how we're managing this technology project, because it was proving to be, number one, a very large one. It's very comprehensive. It touches, as you know, on a lot of items. Number two, it has to still gain a lot of fact-finding and a lot of information in areas of technology we've not looked into. And number three, of course, the ultimate objective is to produce both non-authoritative materials, which can be done much more easily, and ultimately some changes, presumably, to the code or some clarifications to the code on this issue of technology. So the decision was, the one that Brian mentioned, that we should bifurcate this for better management, of better control of the path forward for both tasks. That's what happened.
So thank you very much. So sorry for the lack of knowledge on my part. I understood that the IWSB sort of formed this their planning committee. They renamed it from, I think it was a steering committee. So in a sense, so I didn't know that the IESBA had a planning committee from many years ago. So in a sense, IWSB sort of copied the IESBA planning committee. Is that the sort of?
Yes. Yes.
Okay. So thank you very much.
It was one of the outcomes of coordination too.
Thank you for my lack of knowledge. Thank you.
Thank you, Shigeyo. So Helda Bloom has thoughts.
Thank you, Galen. Good afternoon again. Thank you, Brian, for your presentation and also for engaging with Accountants Europe last year on the subject of technology and for the podcast you did. Our members have discussed this, and I think overall they believe it is important for IESBA to look into, the implications, ethical ones, especially of new technologies. I have to say they were having a preference for having a non-authoritative material, and as far as considering and changing the code, they would ask that that is done if there is really a need to do so, and to also have a little bit of a pause with all the changes that have been made recently. As far as subject matters to address, I see some of the ones that were in your list that actually had popped up in our discussions as well. For instance, you had the one on confidentiality, which is considered as an important one, where technology has really changed the old ways, and that needs consideration. Another one that came up, and it is linked to confidentiality, it's the use of social media, and especially with younger colleagues, not only, but their appreciation for confidentiality actually might have changed because of the use of the frequent use of social media, and that might be something that should be considered. You refer to data governance, and in our discussions, actually, something in particular related to data that came up was hosting of data, and if you look at the debate of non-audit services, and what does that mean, hosting of data, and that's something with the technological advances that really might become more prevalent, and so what does that mean? What are the ethical and independence consequences of that? And finally, I think we might in the future have other discussions and potentially other ideas for you to consider. And overall, we would be happy with taking a bit more time to go through and to come up with the ED than you had originally planned. We did not have any issue with this, and we would support that. Thank you.
Thank you, Hilda. And Dawn.
Thanks very much for your presentation, Brian. There's certainly a lot of interest and activity across the profession related to technology, so certainly support that. The SMP AG also supports the principle-based approach, and so just want to echo support for that. And also, I've been asked to pass along the desire that there would not be significant changes to the code because of our desire for a period of stability. So to that end, the delay of the additional 6 months is also a positive thing. Thank you.
Thank you, Don. Brian, did you have any sort of wrap-up responses to any of those comments?
Sure, yeah, briefly, Galen.
Yeah.
So, Shigeo, thanks very much in terms of your commentary regarding the delay. I know the PIOB has been interested, if anything, in accelerating the project, and I can say that our interests are aligned there, and it's really trying to find the right balance between the needs of stakeholders and what folks are experiencing right now with respect to implementation, adoption, being able to respond to exposure drafts and so on. There's a lot of stress in the system, as I'm sure you're aware. So it was not lightly that the planning committee came to that conclusion in terms of putting forward the recommendation to the board next week for the delay. The desire is not to have a further delay. Let's see what the board thinks in its discussions as well, though. Hilda, thanks very much for your comments and particularly for helping us with our process of prioritizing the subtopics within these different areas that we're going to be looking at. As you can probably appreciate, and so can anyone else who's had discussions around this area and thinking about their own organization doing work with respect to technology and ethics, there's no shortage of topic areas to cover. It really does come down to where do we start, and then starting to put that material out. And again, that's really the intent of the TWG, is to accelerate that process. But thank you very much for your feedback on those. I know several of the points you're bringing up are high up on our list. I was interested in your comment around the use of social media and also in younger cohorts. And I might just refer you to some excellent work that we had uncovered from the U.S. has an Ethics and Compliance Initiative, or Ethics Compliance Institute Initiative. They changed their name not that long ago. Who put out a paper on generational differences in terms of these sorts of issues, dealing with ethics and certainly confidentiality and what's considered confidential by, in particular, individuals who make a lot of use of social media. I think you'll find quite shocking, or maybe you won't if you've looked at other research in this area, but it's definitely something that'll open your eyes about how someone, can so, in our opinion, misinterpret what's meant by confidential information, and it's taken extremely liberally. So it's interesting. And Dawn, thanks also for your comments around the support for principles-based approach. Definitely, that is our intent to continue that way. Our desire is not to put forward changes to the code that really aren't meaningful. They need to be responsive to the environment, to what stakeholders are saying, and they really do need to fill an actual gap in the code. Obviously, the whole point of a principles-based code is so that you don't keep drilling down into small minutia and then again having to try to redraft it, rules and so on, to address each new issue as it comes up. So that's very much front of mind for us throughout the process. All right, that's it for me, I think, Galen.
Okay, then I guess we're going to turn to Rich.
Certainly, and thank you for having me join you today. We're on the next, okay, there we go. We're going to talk about the two surveys. The first one was a survey on technology and complexity in the professional environment, applying to all professional accountants, whether they're in public practice or more importantly in business. And that focused predominantly on this question of complexity that I know the CAG considered at their prior meeting. And then the second one was a more specific survey on technology and auditor independence. There was good response to both. We'll show that in a minute. I think while there was a November 25th deadline, I don't think the staff turned away any comments. We could actually move forward to slide 11. I think in the interest of time. This gives you a little bit of a sense of the responses on the complexity survey. I would add there were a couple, I guess for space reasons, there was actually important feedback provided by regulators. And actually, we did even get a few responses from individuals who would be considered those charged with governance. So audit committee and board members. So that was those inputs were very helpful, and I would say each of the major geographies represented, the responses were very consistent with the size of the world population in those areas, and very strong responses, particularly from Asia Pac and Africa, the continent of Africa. I will move into the kind of the key question here, which is on slide 12. And these were the 4 points that have been presented, I know, in previous meetings. We're going to spend some time on the actual percentages of each one. But the first approach was designed, the first option that was asked about was, should there be modifications to the lead-in paragraphs to recognize potential for additional threat categories? There was pretty good support for that. I will say one of the things we should be very clear, these are not mutually exclusive options, and I don't think we're thinking about that as mutually exclusive. The second option was about whether we amend each of the existing threat categories to build in missing elements. Third option was to add a new threat category specific to complexity. And then the fourth category was to consider highlight complexity in the pervasive factors and in decision-making while applying the conceptual framework, particularly when thinking about the fundamental principles as well as the professional judgments. It is interesting that in a question within the survey, 74% of the respondents indicated they did not think there were threats to the fundamental principles that were not already captured in the 5 categories of threats, even though many respondents, selected multiple choices and different options. So that is something that when you see the next slide in a moment, I'd ask you to keep in mind. The other thing that was interesting on this complexity issue, it was clear from respondents' responses that in a very important number of responses that the issues of complexity were not necessarily directly tied to or even limited to technology-related issues. A number of respondents cited many other areas that were complicated. In fact, one of the ones that most commonly came out was the complexities of understanding and applying laws and regulations across jurisdictions. Things like going concern complexities, valuation complexities, the new expected credit loss standards that the auditors and the preparers are dealing with was another complexity. And I won't go into all of them, but it was well recognized that complexity did not just sit with technology. So if we could move to the next slide, this was the kind of the summary of, if you count people's all their votes, some of which voted many times, as you note on the right, 32% selected all 4 options. But that's where we kind of looked at the other questions and highlighted that it was really options 2 and 3 had a fairly strong view that maybe those weren't as the best answer, but a very, I think a lot of feeling that having some explanation in the lead-ins to the paragraphs referenced might be a good way to make sure everybody understands there could be additional threats in general that have to be thought about, and then a lot of favorability towards some application materials. And that's really consistent with the straw man that Brian mentioned, that he, as the first task force chair, brought forward for the board to start to think about at the December meeting. Let me move then to the second survey. And this is the survey on impact on technology. And you can see, get a sense for who the respondents were. Again, I would tell you that we had obviously less respondents, but good representation geographically, with about equal amounts from North and South America, Europe and the United Kingdom, and Asia Pacific, for example. In terms of the key themes, and this is probably one of the we're going to unpack a few things here on this next slide, which is slide 16, I believe. It was interesting that this very first question is a good example of a couple things. So the question was around whether NAS provisions apply if you're using or selling or licensing technology to remember, this is on independence, so that would be to a client with independence restrictions. And as we would hope, 76% of the respondents said, yes, you have to think about the NAS provisions. And when you think about that, everybody gets excited and says, well, that's a high percentage. But I have to tell you, we're more concerned about the 24% that said no. And this is a great example where, you know, collaboration with the NAS implementation project, other communications and outreach, and potentially non-authoritative materials are all means that maybe need to be used to make it clear what IESBA's view on this, because it's very clearly, it doesn't really matter whether you provide it to service solely through human efforts or whether you provide it exclusively for technology. If it's not permitted, it's not permitted. And so that's something we want to work on. Interestingly enough, there was a question on whether we needed to provide some guidance on product versus service. A very high percentage said there was no need to categorize, well into the mid 80% range there. And so that was helpful as we thought about it, things to deal with. And again, all of these inform not just the task force positions, but it also informs the working group's positions on areas of focus. And similar to the very helpful comments that were made in the Q&A session there, where there were good points made on areas that might inform and do inform us on that. There was questions around amending all the sections of 600 and its subsections. This was very mixed, with about just under 60% saying no. And I think, and 42% still, or 43% still saying yes. I think what's interesting is this went out before the final approvals of NAS and fees, and obviously NAS and fees haven't been published. And there is some perspective that some of the reasons that people might have still said yes are probably when they understand the important changes made by NAS and the corresponding benefits from the fees initiatives may probably reduce that a bit. And that's another piece of why we want to work very closely with the NAS and fees implementation task force and the feedback they get as they do outreach, and incorporate that into further thinking here. On the next question on should subsection 606 be clarified, I think it's very clear that we're gonna do some clarifications on that, kind of to keep in mind the principles-based approach, and also to keep in mind that we're trying to do this in a way that addresses the technology, that's the technology section, technology issues broadly, and not get too narrowly focused on individual items. It was interesting that 75% of the respondents, we're going to talk about this more on the next page, 75% of the respondents said that they could use some clarification about implementation. What does implement and design mean? And again, that might be an example where, as opposed to making a change to the code, some non-authoritative materials would be helpful. There was a question about what, it was really not a yes or no question. It was a broad-based question on the sale and license. Do sale and licensing of tech create a business relationship? There was almost every answer had some difference to nuance to it. But that is also helpful to understand the breadth of the things people think about in that space. And that is still probably, we think there's probably some things in the business relationship section that could be potentially clarified in the code. And again, also potentially the source of some non-authoritative materials. And then one that was, I think we all knew going into, and we're going to talk about more on the next page, this question on routine and mechanical, and what does little or no technical or professional judgment. And there was a lot of the 75% favorable view that some help, some explanation was needed there. And so if we switch to slide 17, you see a little more breakdown on that, the questions on 606 and that last question on routine and mechanical. 3/4 of the respondents would like to see the clarification of customize and configure. More than 60% want to see clarification off the shelf. Another 63% clarification and not significant, and even 20+% wanted the clarification of the word other. So I think it's safe to say this is an area that there's some effort needed that probably could entail both adjustment to the code, although we need to keep in mind, again, this was before the NAS project, and there were some changes in that section from the NAS project, and we want to make sure we get some feedback from the implementation group's experience with that. But again, I think this is clearly an area of some emphasis. So with that, Galen, I would move to the question slide and open it up for questions for either Brian or I to try to address.
Okay. Thank you, Rich. So let's see if we have some questions. I'll start off. One thought that I had when reading through the materials, Rich, was, and I saw it crop up in a couple of different places, on the sale and license of tech, and I was thinking, about support, and you can sell technology or license it, but when you tag on support, that seems to me to be one step further, sort of an invasion of independence, and I think maybe support might be something to consider. But I see Wei Meng has raised her hand. Wei, did you have a thought?
Oh, thank you. Thanks, Galen. Thanks a lot for the presentation. It is well organized. First, I would like to express my support for the principles-based approach to deal with technology-related matters. Second, I would like to share my thought on the 4 options. Could you go back the slide to page 13? Thank you. As far as I understand the threats in the accent code, they have negative implications, and these threats are caused by inappropriate arrangement. Complexity resulted from technology applications or other factors itself is not a threat, and I think it is a neutral judgment with no good or wrong. Complexity, in my view, does not exist independently. Since that, I think it may not be a good choice to add a new category of threat. Although mentioned by the speaker, the 4 options are non-mutually exclusive, but the meaning of some combinations of them is obscure. For example, the combination of option 2 and 3, it is not easy to understand. It may need second thought when analyzing these responses. That's all. Thank you. Thank you very much.
Thank you, Wei. We don't have other hands up at the moment. Rich, would you like to respond to that? See if there's other people following up.
So I actually, Wei Ming, I think your comments are very consistent with the point I mentioned that we didn't actually type on the slide, but that 3/4 of the respondents really didn't support making changes to the threats under either option 2 or option 3. For the points you made, and I think that's why I mentioned that the task force through December at least had been leaning more towards, frankly, more towards option 4 if it had to do something in the code, because as we also mentioned from the survey, many of the respondents addressed complexity issues that had nothing to do with technology, and so I do think it is it's a factor that one always has to think about, and particularly in terms of how a professional accountant responds and addresses those issues. But it is not unique to technology, and I would agree with it. And I think that's where we're headed. Just as a preview for the CAG, that we're probably not headed towards modifying the threats themselves. And Galen, you gave an example that I thought is like spot on. This is a personal observation, but I would tell you I wholly agree. If you're involved in providing support on a software that is at your audit client, that appears to me to be clearly inconsistent with the existing principles of the code. The question is, do we say something further in the code, or do we address that through non-authoritative materials? And I think that's an example where a lot of things could be accomplished. And I like Brian's plan where he's trying to roll out non-authoritative material on a periodic basis, because there's a lot of opportunities to be helpful as we get into very specific areas. And I'm not precluding that there would be a change to 606 related to the issue you raised or around license or sale of software at all. I think there probably is some need to address some things, but there's aspects of it that go beyond the principle that we want to demonstrate, that where non-authoritative material or other forms of communication would be helpful.
Thank you, Rich. Appreciate that. Shigeo has some response.
Well, thank you very much, and thank you for the presentation. On the second survey, I was going to sort of say something about the 76% of the respondents sort of agreeing with the view that NAS provision should apply to firms selling or licensing technology. And I thought this was a very important point, sort of suggesting independence requirements should be applied in this area. But I take the point Rich made, and maybe it's the problem of 24%. And in any case, I think it's an important area that we need to think about. Thank you.
All right. Rich, I don't have any other hands up at the moment. Did you have any sort of concluding remarks on your presentation?
I don't have anything else to add. I do appreciate the comments and the feedback throughout this. It's always helpful to get that, and a couple of key points have been mentioned.
All right, then. We will close off this session of on technology and look for some closing remarks. I'll invite Shigeo, our PIOB observer. Any sort of final thoughts that you might have on our session today?
Well, first of all, I want to thank you for giving me the opportunity to observe and participate in this meeting. I am pleased with the level of discussion, and I sort of sharing the ideas, thoughts, and I think it was a very good discussion. And the discussion remained responsive to the public interest, and I'm happy. Thank you.
Thank you, Shigeo. And Stavros, did you have anything you wanted to add?
Well, I won't add anything more to the substance. I will just say that I want to thank the CAG and you, Galen, for being receptive of our presentations and making very good comments on things. I'm quite conscious and sensitive that technology is an area where, because of its complexity itself, we should be very careful in our steps. And I think both our presenters showed that we're trying to actually build a roadmap through this complex landscape. And I'm very glad to see that CAG members have been very helpful and have made very valuable observations, which are a good guide for our discussion next week. So thank you all very much for that. And I didn't have a chance to say thank you to the SEC colleagues who made the presentation, but I guess they're not around any longer, so I will shoot off a thank you note to them separately. But I thought that was a very good discussion, and it sort of, after the fact, gave some more basis to the benchmarking exercise we're doing, because all frameworks in the end are hybrids. There are principles-based portions, and there are, in the code too, there are requirements, there are direct prohibitions, especially now with the NAS, the new NAS items we're doing. So I think that I got, how shall I say it, more confidence about the value of the benchmarking exercise. And as I said, we're looking up to what both the SEC and other major jurisdictions do in order to get inspiration about how the global code could become more useful, more applicable around the globe, and more acceptable. So thank you all very much. And thank you, Galen, for your chairmanship.
Thank you, Stavros. Appreciate those remarks. And let me just looking forward for the CAG in terms of a little bit of planning forward. So we're planning on having a follow-on CAG video conference on May 17th, and you should be getting a save the date shortly on that, and it'll be at 8:30, same time, 8:30 in the morning, Eastern Standard Time, and the topics are going to be around the group audit independence project and the tax planning initiative. And you might be wondering, well, why didn't we do that today? And that is because just the progress of where they're at on feedback on exposure drafts and where the board is at on it just didn't make it timely for this meeting. And so we need a little bit more time to prepare for that discussion, but please keep that in mind and look for that email as it is coming to you. And then the next complete CAG meeting will be scheduled for September 9th. We don't know whether that will be in person or a video conference. I would bet on video conference at the moment, but we'll just have to see. It's too early to make that determination at this point, and I see Stavros nodding his head to that. I'd like to thank all of you for your participation today. It's very important, and it's appreciated, I can assure you, at the board. So with that, I think we're going to close off the meeting. Did I miss anything, Jeff?
No, I think you've got everything. Thank you, Galen.
All right. Well, you have a few minutes. We're finishing up early. Thank you and goodbye.
Thank you, everyone.
Thanks, everyone. Thank
Goodbye.
you.
Thank you.
Bye.
Bye.